Good afternoon, everyone. This is personally my favorite webinar of the year. Back when I was just a member, this is the one I would look forward to because the OFR always let us know where our industry is headed. By the way, I'm Orlando Diaz, your FAMP president, and I'm at an airport. So if you hear noise, don't you know why. But I'm very happy to have again the OFR. Not only do they go to our trade show, but we have this webinar that we've been doing for a couple of years. Like I mentioned, this is they give us a heartbeat of where our industry is going, where it's headed, how many loan officers there are in the industry, where we have a decline, where we have an increase. This has always been very helpful for me as a business owner. It also gives us an indication of where their mindset is. They've always been very gracious. The Office of Financial Regulations have always been very graceful with us. We've had a very cooperative relationship with them. They've asked us for input throughout the years, and they listen to us, and we listen to them. And those have been around for a long time. And Greg has been around for a long time. He knows how this industry was prior, leading up to 2008 and where it is today, and how our industry has evolved. And it's been a collaborative effort between the Office of Financial Regulations and the Florida Association of Mortgage Professionals. So I'm going to sit back and I'm going to turn it over to our immediate past president, Nathaniel Bittman, who's going to be making introduction to the Office of Financial Regulations. Daniel, take it over.
All right. Thank you, Orlando. Thank you so much. Appreciate that introduction. Thank you for that. I'm just so excited for the three of you to be here. I feel like we know each other well to a certain degree, right? It's great to see Greg and Bill and Brandy. Thank you for all the work you do. And we will probably see you again when we take our trip up in March, or maybe February rather, as we're heading up for what we do for our lobby day to do some of the legislative work that we do. And you're always so gracious to give us your time as well then. So I'm not going to hold anybody up. I'm excited to have Greg, Bill, and Brandy. I'll allow each of you to kind of share a little bit about yourselves and what your position is at the Office of Financial Regulation for the Division of Consumer Finance. And thank you again for your time.
Thank you, Nathaniel. Thank you, Orlando. We're obviously very honored to continue this long-standing relationship that we've had with FAMP. As Orlando said, I've been around a while, and Brandy and Bill have been here a long time as well. So we've been, around and working with FAMP for a very long time, and it's always been a great relationship, great opportunity. We find it extremely important to keep the lines of communication open and work as partners together. I don't see it being successful in any other manner if we can't be partners together. And we have had that partnership, a great partnership for a very long time. And we want to keep that going as long as absolutely possible. And certainly as long as I'm here. But I'm sure it'll continue on beyond that with whoever takes the reins after me. But it's a great opportunity. We love to share information with FAMP and its membership. We recognize how important FAMP is in educating and informing its membership in the regulation of this world and how things are going at any given time. And we're happy to be part of sharing that information. As I mentioned, I'm Greg Oakes. I'm the director for the Division of Consumer Finance. I've been here now 31 years. So it's been quite a long time, and it's been an absolute blast. And I wouldn't change a thing and wouldn't do anything any different at this point in the game. So happy to be here. I've got two of the best with me, Brandy Smith and Bill Morin. So I'm going to let them, I know you know them very well, but I'll let them introduce themselves. And Bill, why don't you start us off?
Sure. My name is Bill Morin, and I am the chief for the Bureau of Registration. Essentially, that's handling all the license applications, renewal transactions, amendments. I've been with the office since 2001, started on the enforcement side, doing working exams and complaints, and then came over to the registration side in 2018. It's great on both sides. And I'll say, if you have any questions, I definitely would encourage you to contact our call center, email the office, or you can contact me directly. For a new applicant, I tend to find the ones who kind of ask some questions and maybe call us on something tend to have a little bit smoother application process to get licensed, and some that maybe don't and try it on their own, or just kind of see what happens, tend to have some rough spots. So definitely contact us with questions, and hopefully we get you some good information.
And I'm Brandy Smith. I'm the Bureau Chief over Enforcement. I was with the office when it was Department of Banking and Finance, and I started in investigations, and I've worked in investigations, registration, and now enforcement. So I did leave for a little while, but I've been with the office a total of 22 years.
So which one of you has the more challenging? I mean, enforcement sounds like that. That sounds almost like CrossFit, like you're going after it. It's very Spartan. Is that the funnest part of the job, is the enforcement part?
I mean, I thoroughly enjoy my job. Let's just
Okay, that's a great answer. All right, thank you.
All right, so we'll get started. Bill, if you'll go ahead and move us on to the next slide. So we've kind of gone through the introduction. Bill will take an opportunity to kind of share some licensing information, application statistics. Obviously, we're smack dab in the middle of the renewal season. Busy time for us, busy time for Bill's staff. We want to get these renewals processed as quick as possible so that everybody knows they're good to go and can keep moving on. Once Bill's done with his stuff, Randy's going to take over and talk about some information. She doesn't have any slides. She's going to just fill you with information. So get your pen and paper ready. Give you a lot of good information about some of the things we're seeing on the enforcement side of things. And I think Bill will cover legislation as well. And then we'll, if we have time, open it up for questions. So Bill, you want to jump ahead, please, sir? So just by way of a continuing introduction, you've probably seen this org chart before. We are the Office of Financial Regulation. I report to our Commissioner, Russell Weigel III. The Commissioner reports to the Financial Services Commission, which is the Florida Cabinet. So I have one boss, he has four bosses. I'm happy to have one boss, but it's a great opportunity and a great opportunity to work with the cabinet. Our sister agency, being the Office of Insurance Regulation, is set up in the same kind of a concept. There's four main areas within the Office of Financial Regulation: the Division of Financial Institutions. They're responsible for chartering and examining banks, credit unions, trust companies, and other types of institutions that are state chartered. These are not your Bank of Americas or Wells Fargo. These are your local community banks that are only chartered in the state of Florida. The Division of Securities is responsible for licensing and examining securities firms, broker-dealer firms, investment advisor firms, and all of the individual associated persons. And so they obviously have their hands full as well. And obviously, the Division of Consumer Finance. Finally, our Bureau of Financial Investigations is our criminal justice agency. They are a criminal justice agency by statute, but they do not have sworn law enforcement investigators. They're non-sworn investigators. They work with local prosecutors, state attorneys, to go after individuals who have broken laws that we regulate that involve criminal activity. So they're out there basically getting people in jail for the most part. So pretty much the organization of OFR, and has been this way as, quite frankly, as long as I can ever remember. And so we'll move on from there. And obviously there's a disclaimer. We know this is being recorded, but the material in this presentation has been prepared by the Office of Financial Regulation, Division of Consumer Finance, as general background information about the division's activities as of the date of this presentation. The information is in a summary form and should not be construed by a member of the public as offering a legal opinion, legal advice, or an official interpretation of any statutory provision, rule, or order that may be relied upon by the public. The opinions expressed in this presentation and the following slides are not necessarily official opinions of the OFR. But now we got that out of the way, let's get started.
Okay. Well, as Greg said, we're right in the middle of renewal season, so I figured I'd start off with some renewal information and statistics. So the renewal season started November 1st, and getting this first slide here just to get an idea of how many licensees were eligible to renew. Essentially, this is our licensee population. So you can look down the rows there. We have our mortgage loan originator, our mortgage broker, and our mortgage lender. Our license types we're all familiar with. And so if you take a look at 2024, look down that column, you can kind of see our counts. And I've compared it back to 2023. And as well as I just kind of added 2022 just to kind of give you a little idea of where we've come from. So obviously the mortgage loan originators, in terms of eligible to renew, it's down 4% from last year. I don't think that's a surprise to anyone. You just kind of what's been in the news and just kind of the trends and such. That's not really a huge decline. But obviously that's just where we were on November 1st. So you take a look at mortgage brokers though, up 5%. The mortgage brokers, so we've seen a trend now for probably about 4 years where we're just getting a lot of mortgage broker applications, and that licensee population has really exploded. And I would say in this kind of 4-year period, we've kind of seen a person get their mortgage loan originator license. They get that 1-year experience, and then we kind of see them filing the mortgage broker application. And they're what we call as one owner or one man shops. That application that comes in for the broker, it's one person. They're the president, they're the QI or principal loan originator, they're everything. So they're a one control person shop. That's been the trend the past 4 years. So on the broker side, it's definitely increasing. Mortgage loan, there's been a slight pullback, 4% decline. That don't really have any trends on that or anything statistical, but that's pretty much it for the lenders. So let's look at renewal rates. So I have the license renewal rates as of basically Monday, just 2 days ago. So I'm just trying to see, well, what percentage of our licensees has renewed already? So we're just past the halfway point. So mortgage loan originators I'm comparing back to last year, we're about the same place we were last year. Brokers, for the most point, same place as last year. Lenders just up a little bit. And then that final column, if you take a look, that's the final renewal percentage. So for mortgage loan originators, since we're on pace where we were last year at this time, where we might land about 81% renewal rate, that's kind of what I'm thinking it's going to be again, because that's the way we were last year. A lot of times for renewal stats, people ask me, what do you think is going to happen? What's going to happen this year? And I'm really big in looking at, well, what's happened the past few years and just kind of giving that comparison, and then, obviously following what's in the news and trends and what we're seeing in applications. So right now, kind of looking a lot like last year. Okay, so again, this is a chart for mortgage loan originators. What I did was I looked at who did not renew last year. So this is last renewal season. I looked at the mortgage loan originators that did not renew. We had about 11,400 loan originators. They just didn't renew. They left the industry. And what I did was I organized it by, well, what year did they get licensed? So all these 11,400 loan originators that did not renew last year, I said, well, what year did they get licensed in? So let's look at that first row. Look at 2023. So about 12% of that 11,000, they got licensed in 2023, and they decided not to renew in 2023. So they were licensed less than a year, right? Not too long. So take a look at the next row. Look at 2022. 30%. So 30% of the people last year that did not renew, they first got licensed in 2022. So they were licensed what? Less than 2 years. So if you keep following that, that each row and kind of keep that mentality, I think this chart here gives you a really good picture. It tells me two things. So take a look at 2020 through 2023. If you add up the 12%, the 22%, the 30%, and 12%, and that's it's like 76% last year left the industry newly licensed. And to me, those are the people, they got in and out during that refinance boom. It's kind of our like COVID era type increase that we had. So that's really the first thing it told me was we had a lot of people just get in and out really quick. And obviously once I think those refis kind of died down, so did the license volume. What's also telling to me is look at the last 4 or 5 rows, so 2019 and prior, pretty low percentages for the most part. A lot of people that left, I mean, a lot of the longtime people are staying. So very, look at prior to 2016, only 6% of people who didn't renew last year have been licensed a long time. So it's kind of telling me, a lot of the new people didn't stay, and a lot of the longtime people, for the most part, are in it for the long haul. So, kind of keeping that same thought, looking at our mortgage loan originators last renewal season, I looked at where do they live. So these are the loan originators that did not renew last year. Again, that was at 11,400. Well, where did they live? And basically, all I do is look at the address on the application to get that. So 26% were Florida-based. And then everybody else, the out-of-state, was 74%. So we had a lot of people, a lot of loan originators that live out of state did not come back. So for the most part, a lot of our Florida-based licensees, pretty much stayed for the most part, but a lot of it was out of state. And I just took it a step further, and I just went ahead and say, well, what states had the biggest exit amount that did not renew? So obviously California was 10%, Michigan 7%, Texas 6%. Pretty much everyone else was 5%. That trend, that up top, that trend, it has held true for a few years now. 2 renewal seasons ago, that was it was actually Florida was 20%, and I think out of state was 80%. But it's still pretty strong. It's seeming that licensees that not renewing are pretty much our out of state licensees. So after our last renewal season ended, so our last renewal season started November 1st, 2023, and ended in February of 2024. So since then, so that would be since March 1st of this year to October, I did. So since last renewal season ended, who's applying for licenses? I thought that'd be interesting to see. We had this large exit of all these out-of-state loan originators. So now I'm looking at and saying, like, well, who's got license since March? And interestingly enough, 71% are actually out of state. So the out-of-state loan originators are coming back. They kind of exited. I was kind of saying those last 2 years, we're generally seeing 80%, 75% of the people that do not renew are from out of state. So now I'm looking at, well, who's coming back and getting licensed? Who are newly licensed people? And actually 71% are out of state. So that's picking up. What's interesting about that is, so right now we have about 59,000 loan originators. 39% are based in Florida. The others are out of state. So to see only 29% Florida, again, a little bit of a trend this year, just got some a lot of out-of-state loan originators getting licensed in Florida. And then what states are they coming from? I just kind of broke it down a little bit more. California 12%, Arizona 8%, Michigan and Texas 7%. Pretty much all the states that exited before. So they're kind of just going back and forth. Everyone else less than 3%. Nothing significant. Just have some application stats for you, just to kind of give you an idea of just what our day-to-day application volume is here in registration. So I have this slide here that looks at our last fiscal year. So the office's fiscal year starts in July and ends in June. So that's why I have that time period. Let me just break this graph down for you, just give you a little perspective here. From left to right is our date range, July through June. And then going up on the bars, our blue line is our loan originator applications. Our orange is our mortgage business applications. That's going to be your broker and your lender. And then your green is going to be your branch applications for those lenders and brokers. So just to give you an idea, and is this a lot? Is this not a lot? How does this compare? So our blue, which is our loan originator monthly average for 2024 for this fiscal year was 775 applications a month for loan originators. So let's put that in perspective, right? So in 2021, we kind of already looked at some stats and stuff. Do you think 2021 is going to be more or less? Well, it's going to be more. And that average is close to 1,800. So in 2021, we had 1,800 loan originator applications a month. Now we're at 775. And I use 2021, that was kind of the peak. That was kind of the height of the COVID era and the refinance and everything. So that's why I make that comparison. I will say about where we are now is, I would say, a healthy application volume. It's by no means low. Compare that to 2019. So 2019, I like to look at because that's right before the big refinance, right before COVID. So where were we application volume in 2019? Loan originators was 810. And now we're at 775. So we are kind of right in terms of application volume. We're kind of right where we were in 2019. Just kind of interesting where we've landed. What has changed, what's different when I compare now to 2019, because it's kind of how I feel we're at, is actually the mortgage broker applications. So back in 2019, we were getting about 60 mortgage broker applications a month. And now we're getting 90 a month. That average up there is 90. So again, that goes into that trend I was saying, this past 4 or 5 year trend. It's a lot more broker applications, a lot more small businesses, a lot more, kind of one owner shops. So that's kind of what I'm seeing on the application side. I hope that just kind of gives you a little perspective of our world on a monthly basis on applications. And this is just continued. I continued it from July to October. It's a little bit more, August, September. Pretty much once you get over 800, you're really starting to get busy. 700 is manageable. 800, you really start to get busy. Okay, so that kind of my last slide for just license and application stats. I just did this for fun. So I just broke down our loan originator population by generation. I always, like on the news, on the internet, I always like to read those articles about comparing generations and such. It's always a fun read. So Generation X is right now our top generation. I'm a Gen X, so we're in the lead. What's interesting about this is towards the bottom, we do not have anyone in the greatest generation, but I felt like I needed to mention that based on they are the greatest generation. But what I really like to talk about is Generation Alpha, which starts in 2010. So as you may or may not know, one of the requirements to get a loan originator license is you have to be 18 years old. So by my watch, in about 3 years, we're going to have Generation Alpha entering the business world and probably in the mortgage industry. So that's I just thought that was interesting. So in 2010, we're going to be working with them shortly. And I did just notice that a new generation was created for 2025 called Generation Beta. So just thought that was interesting. That's all I have for the licensing and application stats. I hope you found it interesting and got something out of it. I'm going to turn over to Brandy.
Before you do a full handoff, just in case anybody has any questions, please feel free to type them in the chat. We are certainly monitoring those. Couple of things I just wanted to point out. Thank you for that, Bill. We just so that you know, those of us that teach continuing education here at the Florida Association of Mortgage Professionals, we always love to reference when we with that 1 hour Florida component, Florida State Statute 494. We go through that and we teach it. We always like to do an intro before we get into that with your data. So it's always very helpful. Always gets the crowd excited and so on and so forth. So we always appreciate that very much. Thank you.
Thank you.
3 simple questions for you. One, any chance that, we seem like a data guy, you talk about percentage of one-man broker shops. Is there a possibility to dial that down maybe and get an idea about what does that look like in perspective to mortgage brokers? That'd be a fun stat for our lenders to know.
What Nathaniel, what I do have, and I'm sorry I didn't cover it. So 63% of our mortgage businesses, unfortunately, I don't have it broken down by broker lender, but 63% of our mortgage businesses are what we call those one owner shops.
Okay, that's a very important number.
Yeah.
Okay, so more than half are essentially one man shops. That's very important data for our lenders out there. Thank you. And those are entering the Florida market. Second question is, you mentioned 71% that was coming back. That was very interesting. We talk about signs out there where interest rates might make a reprieve downward and rates might come back down here in 2025, 2026. That makes sense. But the last one that I thought you might find interesting is that you mentioned that application volume is the same as it was in 2019. And when you look at the housing market and real estate, we see the same thing with real estate, that volume in real estate is about the same as it was in 2019, right? So for a lot of realtors that are having a lot of stress out there, but where volume's at, it's actually the same as it was in 2019. So interesting.
Yeah. Very good.
Yeah. So thank you for that information.
You're welcome. Thank you.
I guess we have Brandy on deck now, right?
So I was only asked to put together some stats for mortgage call reports. I know that we've, thoroughly discussed the importance of trying to file your mortgage call reports on time or any of your NMLS registry reports. So what I did was just put together how many folks did not timely file for each one of the quarters in 2024. And in Q1, we were at 734 that had not filed on time. And the second quarter, we were at 1,031 that had not filed on time. And those are brokers and lenders. I don't have them broken down by what type they are. And then Q3, we had 675. So the takeaway is please just make sure you're always filing your mortgage call reports timely. We also wanted to give the group an update. I know in the past, we've let you all know that we have like a compliance unit that's always reviewing these reports on a quarterly basis. We have actually decided we will still know who hasn't filed and we'll still run the reports to know who didn't file timely. But we wanted to let you all know that we're going to start reviewing these on an annual basis. So rather than every single quarter opening up cases on these folks that haven't filed, we're just going to review them on an annual basis. And we've kind of pinpointed sometime in March of each year is when we're going to be pulling those, and that's when we'll start reaching out to the licensees to let them know, hey, you didn't file something, whether it be a settlement agreement or an administrative action or a written agreement or just a notice, that lets them know like, hey, don't forget, you're supposed to file these timely. We noticed that you didn't file them timely. They'll start receiving those annually instead of on a quarterly basis.
Yeah, Brandy, if I could just interject real quick.
Absolutely.
I want to be careful that folks don't think that we're not looking and not watching it, as Brandy said. Our biggest challenge right now, I think, from Brandy's side of the shop is the call reports. It is a massive undertaking. You saw the stats. We've got thousands of brokers and lenders collectively that are licensed. And so, when you look at Q2 where we had 1,000 that didn't file it timely, we have probably one or two people that are handling managing those compliance filings and trying to follow up. We send reminders and notices and emails and everything that we can to try and encourage people to get to file their call reports. It's a massive undertaking. It's almost overwhelming for not only for us, but our legal staff as well. So we've decided to take this approach where we're just going to look once a year. We're going to look back that whole calendar year prior. And so instead of coming to someone and saying you didn't file a quarter or you were late filing it, and working through that process, which unfortunately might end up in a fine, we're going to do it once a year. So you might be looking at multiple quarters in that particular instance. It doesn't necessarily, I'll be straight away, it might actually result in fewer fines and lower fines because we're only looking at it once versus 4 times a year. Hopefully, everyone in the industry recognizes that. We know these things are a challenge, especially when NMLS changes the form. We know how a challenge that is. We certainly recognize that. So we're trying to take a little bit different approach in trying to maximize our resources as well. And so we will be looking at the call reports. We will be looking at the audited financial statements for lenders. So we're looking at that all at one time a year instead of so many instances that it's just overwhelming to us. I cannot emphasize the importance of please filing those reports. We are trying to be as accommodating as possible with this approach and, giving a little bit of a leeway there, and not jumping out right after the deadline. We know that folks have a business to run, and that takes a lot in of itself. And then they have to maintain compliance filings and deal with changes in the form. That just throws a wrench in everything that you do. And so we understand that. But please, I know FAMP is doing a great job at communicating with its members. I suspect if we looked at the membership and the folks that don't file or call reports, it probably would be very few of your members. So I know you're doing a great job of that. Unfortunately, we don't have everyone being a member of FAMP, and I can't go out and promote that. Unfortunately, that would probably be a conflict for me, but I know that you do a great job of educating your members on filing those. And so thank you for that. We're just trying to handle that volume. And, Brandy's staff has a lot of other things they'd like to do in addition to just, kind of babysitting those compliance filings. So, we're trying to maximize our resources, but we do appreciate everything that you do to encourage staff, your members to file those reports, get them filed, even if they don't have any activity, file them with zeros. Just get them in there and we're good to go. We can rock on and keep moving. So I do want to echo how much we appreciate that.
Thank you. I just, maybe this is something that you miit be able to, and we have a question in the chat box. Just a quick question to kind of get you started a little bit. One of the questions is coming from one of our instructors, but I have one as well too. Something we teach each year in the 1 hour component for Florida State Statute 494, we do talk a little bit about, the component of advertising and obviously not having material limitations and whatnot, making sure that with an interest rate, we have APR. So there's things that we have there. I don't know if it's an enforcement part of what you see in the audits. Where does the office stand in terms of auditing of some of the social media content out there and the accuracy of that? We do get a number of complaints that come from our members that are asking us to kind of scrub that somebody posts something via social media out there. There's not material limitations to their advertisement. They're not putting APRs, and some of the content may seem a little bit not quite accurate. So just out of curiosity, is that something that's in the audit practice?
So when we go out on an exam, we're going to be looking at all of that. We're going to be looking, we're going to ask for your advertising file. And then of course, we're going to do a review of our own to see if we found anything that would classify as an advertisement ad that the broker or lender should have on file. It is part of our normal exam process. So yes, that is something that we would be asking for. I don't think it's a common finding. Well, I know it's not a common finding. I think the majority of our findings here recently are, of course, inaccuracies in their mortgage call report because there's discrepancies between the loan transaction journal and the mortgage call reports. That's probably the most common findings in the majority of our mortgage broker exams right now. As far as doing more exams, because I see that's also one of the questions in that comment. We have been trying to get out there and do more exams that are in 494 arena. So y'all are probably starting to see us engage a little bit more and coming out more frequently. Obviously, we can't touch all of you because there's so many of you, but we're definitely trying. Yeah, we're definitely trying to get out there more.
Yeah. In that question that's coming from Daniel Hughes, who's one of our instructors here at the FAMP, there's been a lot of talk and some material that's been circulating out there, not only audits for mortgage brokers, but the extent to where that audit goes with regards to any steering violations, loan officer compensation. Is that something that the office does audit for, steering and LO comp? Is that kind of in your purview?
So,
loaded question, I know.
A little bit. And so what we're looking at, so our authority lies within 494. So where we have statutory provisions, we're doing audits on that. There's also provisions in the statute that make reference to federal laws, TILA and RESPA. So as part of our exam, yes, we're looking at TILA and RESPA to see if there's violations there. I know from the CFPB standpoint, which seems to be somewhat the question, they're way in the weeds in a lot of those particular issues. We might not be as far in the weeds as they are on some of that stuff, but I think some of the question was about the CFPB doing audits on a more regular basis. They have a wealth of people in their organization. Brandy has, I think, about 36 examiners that encompasses all the exams that we do in consumer finance. And one of those exams in the money service business arena has, you probably heard me say this, has a 5-year exam mandate where we must do an exam once every 5 years. So while we're spending as much resources as needed to make sure we comply with that statutory mandate, we also want to make sure we do exams and obviously like 494 and some of the other areas. So I don't know that we're probably taking as deep a dive probably as the CFPB. Again, they're sending a multitude of people on an exam. They're out there a long time. They got, I don't know how many examiners they have, probably hundreds, if not thousands. So it doesn't, just because they're doing more exams doesn't equate to us doing more exams. We don't typically join a CFPB exam. We would probably join a multi-state mortgage exam. That's other state regulators like Florida, sometimes maybe CFPBs involved in that, but those are few and far between. Those are usually typically large mortgage lenders, large companies that are licensed in 40 to 50 states. We may jump on 1 or 2 of those a year because it's beneficial for us to kind of use resources from other states if need be. So I don't know that just because of CFPB is ramping up, that doesn't necessarily mean we're ramping up.
Thank you. That's a very helpful answer. I know we've been chatting behind the scenes a little bit about that as some of that news had kind of circulated. So I appreciate you clarifying that. I don't see any other questions in the question box, and I don't have any questions for you. I'm always grateful for you doing this, and so is our president, Orlando Diaz. Any last comments from any one of you wonderful 3 people?
Well, again, I just want to echo the opportunity to be together with you and to share some information. If there's anything that you want us to share in the future, please do not hesitate to let us know. We want to give you information that's valuable for you. So we've been doing this for a long time, and we will be glad to continue to do this. We have no desire to stop. So just let us know if, there's any information you want us to share. We'll be happy to add to that.
And Greg, I'm sorry to interrupt, but it looks like we just had one last Hail Mary pass question that got thrown in there regarding the company financials for brokers. I don't know if I'm not sure I'm understanding that, so I apologize, but I think what we're referring to there, Paula, is do mortgage brokers require certain financials? I know that there's different tiers of that depending on your service or endorsement and things like that. Yeah, okay.
For the state of Florida, we don't require, for brokers, we don't require any financials. There's no financial condition requirement. So for a mortgage broker, no, there is no financial component. I know that NMLS requires like a annual financial condition report that's kind of a component, I think, of combined all 4 quarters. So that's an NMLS requirement, not necessarily a state of Florida requirement. Does that answer your question, Paola?
Listed as an active pending item. So maybe on the NMLS piece, what you're referring to is maybe when you're doing your renewals. I would recommend, I think the 3 of you would agree, is maybe contacting NMLS on that one to kind of clarify and get through that.
Yeah, because those are automatic license items being placed out there. We don't place those license items.
Yeah, so you probably could contact NMLS, let them know that the state doesn't require any financials for a mortgage broker, and you're fine. You're not a correspondent lender, and you're not looking for a servicing endorsement, so you're fine. Okay, I think that another one, people are getting hot right now. They don't want to let you go.
Yeah. Nathaniel, I have one before I have to go.
Go ahead, Orlando. Why don't you go first? Go ahead.
It's about when you're doing examinations. If you guys are starting to see certain things over and over again, let us know at FAMP, because Nathaniel sets up all the webinars. And if there's an issue with advertising and you want us to address our member base with it, let us know and we'll do a whole webinar around it. I know we've always had that open line of communication, but if you're seeing something different or you're seeing something over and over again and it's a simple fix, let us know. We'll put a webinar together.
Okay, great.
Thank you.
Real quick, before we jump into that other question and to try and address Orlando's comment. So Brandy mentioned the inaccuracies in the MCRs. And if I remember correctly, Brandy, one of those is, so the MCR report starts with the beginning number of applications and an ending number of applications. So in theory, when we get to the next quarter, that ending number of applications from the previous quarter should be your starting number of applications for the next quarter. That's a lot, I think, Brandy, where we're seeing some of the irregularities in the beginning and ending between one quarter to the next. Obviously, number of applications, or things like that maybe, but I think that's one of sounds like a real simple thing there, is be cautious for that.
Yeah, I think a lot of times, because throughout the quarter, they have so many files or applications that they receive, but then the next quarter, certain ones are denied or withdrawn or whatever. They're not making those correct updates. So we're finding it through their loan journals. So just, I think a reconciliation process for everyone would be very helpful in that manner.
Well, I think it was 2 years ago, we had a mortgage call report training. I think we're due for another one, especially when you mentioned that they just changed the form, and I know, for example, I was lost when they changed the form too, and I was able to then call NMLS, and they told me, well, no, you have to specify directly which is the services that you provide, whether you do reverse mortgages, whether you do whatever type of lending. So then the report that you have to fill out is made specifically for you. So that's one of the things that I don't know caught me off guard. So I think that a new training is in order.
Thank you. We'll certainly look into that. The 2 great recommendations, and we're always looking for advancing the needs of our members. One of the kind of leading into that, Orlando, if you didn't have any other questions, kind of leads into this next question that we have here. Are there any external resources that we can rely on as independent mortgage professionals to ensure we are complying with all laws of OFR? Typically, when we have asked in the past, the analyst quotes policy and not necessarily guidance. I think I know the answer to this one, but I'll let you have it.
Yeah, so our role when we're doing an examination is to ensure compliance with the statutes and rules. So there's not necessarily a policy statement that goes with that. We're simply looking to see, are you complying with the statutes and the rules? So when you call us and say, well, what do I need to look at? Our first answer, we're going to be statutes and rules, because that's what we're looking to ensure compliance on. We don't really have policies around that aspect. We have procedures that we do internally. So for an examiner who comes in off the street and gets trained, they have procedures on what to follow to conduct the examination, the areas that we're looking at in the examination, which are basically looking at the statutory compliance. So it is difficult for us to give you something because we don't have a quote policy or guidance on that issue. It's, here's the statute, here's compliance. Probably doesn't answer the question that they're looking for, but sorry.
Well, let me add into that just a little bit, because I do understand as an independent, this has come up a few times. I do want to share with all of you that are on the call, please keep in mind that we here at the FAMP do have resources to, people that kind of specialize in helping you with audits and exams. There are, we have institutions out there and firms that actually specialize in helping you keep your files compliant. It is a service. You do have to pay for it. It's not affiliated with the FAMP, but there are members of ours. But there are services out there that offer that. And as an independent professional, that may be an expense that you have to kind of put in front of you. But my suggestion is post this call, reach out to, our offices here at the FAMP, and we will be more than happy to put you in touch with Nelson Locke and a few other individuals that do specialize in how do you put together a properly compliance package and how do you work with the office in terms of things like that. They may answer both questions, because Ronnie's question is also about examinations. Is there like a cheat sheet? I think maybe in the past you might have had something that you did distribute, correct?
Yeah, so if you look back at some of the past presentations that we've done at some of the webinars, or even at your annual trade show, we had that on one of our presentations. Some of the things that we asked for, the documents that we'll be requesting if we come on site. It doesn't really tell you exactly what we're looking at. It tells you what documents you need to have handy and available to provide for us on a books and records exam. And we did keep that in the past. On the examination side, focusing on mortgage call reports, because that seemed to be, I think, the biggest concern and issue.
Yeah.
And we can look, Nathaniel, we can look at maybe trying to come back and revisit some sort of presentation, maybe at your annual conference, your next annual conference. Obviously, that's something that'll take a while for us to put that together.
Sure.
We're happy to do that. We understand how valuable and important that is, to kind of walk through, the components of the examination and what we're looking for. We'd be happy to put something together maybe for the annual program.
Well, as Orlando mentioned, maybe doing, if it's okay with you, I can coordinate with your office, but, our president, Orlando Diaz, mentioned, doing a call report webinar, but maybe with that, Brandy, if we can maybe combine into that webinar. It could be maybe just an overview of what that looks like. I know you're not going to get into the specifics, but maybe just the overview of that. Would that be something that the office might be able to do?
Yeah. I mean, I know we've put something similar together, but it doesn't go into in-depth detail. It just,
yes, of course.
It's basically just giving initially, what we're asking for and what we're looking for.
And, we can see here in the chat box, as I mentioned, Nelson Locke, Nelson Locke is a past president of the FAMP, and he's an attorney, but he does specialize in some of these things that we're talking about here. He does help you with, like, again, putting a file together, making it compliant. What are some of the audit practices? What do you need to know? So again, highly recommended. And if somebody wants to reach out to our main line out here at FAMP, we'll put you in touch with Nelson. He's a past president again, and a great guy, does a great job. The last thing I want to throw out here is, I think, one comment about, and I assume if anybody has any questions, Paola might have some additional questions. She can just contact the office, I would assume, with regards to any other issues pertaining to that NMLS piece.
Absolutely. Anytime. Just reach out to us and we'll, Bill or Brandy or myself at any time. You don't have to wait for a webinar to happen to ask a question. We're here every day and happy to answer any questions. We want to be available.
We appreciate that. And your team really does do a great job. I also want to remind those folks that are on the call, be on the lookout. We do once, twice a year, we do offer a training for new mortgage professionals that whether you're a new mortgage professional kind of in origination practice, but also as you're setting up your business, we do a webinar call once a year on how do you set up your business and what are some of the practices and tools you need to have available. And we do cover some of the compliance pieces on there too. So thank you. All right, well, we'll wrap up because we are just at 12:51. I see no other questions. So thank you again for you three. Hope you have a wonderful Christmas holiday. Hope you had a great Thanksgiving, and we look forward to a great next year with you.
Thank you.
We look forward to
Okay. Thanks, everybody. And if you're not a member, be a member. If you know somebody that needs to be a member, this is